Good morning. It is Friday. It is Commodity Corner. It's another week in the books. I hope the week was active and action and we all made lots of dough. But, as we look into the commodity world, which is what we do on Fridays, what have we seen? Well, we continue to see that no matter what you hear, gold continues to be under siege and under pressure. Yes, it's made a couple of attempted rallies, but we've been on our mind saying that we're looking to sell that gold at 1420. I see no reason to change that philosophy. I think that 1420 is a good level. Crude oil is getting a little bit out of its range, I think. I think we're getting a little bit tippy top here, and I think you can look for some pretty heavy selling pressure in the crude. We went through, they always get us in the summer driving season, but the bottom line is we have plenty of inventory and we are a net exporter. I think anywhere, under $96, $97, you want to sell these puppies because I think that they look to be going lower. When we look at the grain markets, we're seeing some activity, but what you're seeing really is in grains they have what they call new crop, old crop. And what's going on right now, the action right now is all in the old crop. There's a little bit of a short squeeze because they're running out of supplies in the silos. But the new crop is significantly lower than the old crop. And just to give you a comparison, old crop soybeans are trading at about 15 and change, and new crop, which is November soybeans, are trading at about 13 and change. So there's a significant premium, and why? Because that's for delivery right now, and the other is future in planning and what they're going to grow. And I think you're going to see that these remain in a downtrend, and I want to continue to look. Basically, the commodity space along the board, especially if we're right to the market, the alternative investment groups are going to lose their luster, because right now that's where what money is going into. When there's risk, they go into these alternative investments. If not, they get traded, and they're mostly traded by farmers who are hedging crops. So we want to look at that. We see a stronger dollar. I know the end of last week was a little bit weaker, but we see a stronger dollar in the long haul. So what we want to focus on is a stronger dollar will equate to lower commodity prices. We also want to look at the bond market, the interest rates. Interest rates are at one-year highs. It's something that you need to take note of because that's a sign that we're starting to move. So how do I see this week? Well, I think that I see a lower, moderately lower, not severely, a moderately lower Dow. And I look for commodity prices to be lower across the board. And I think that's how I see it. I think you want to play everything you can right now. Now, this is not individual stocks. I'm talking about macro markets. Everything you can from the short side until they show us difference. Keep an eye on that volatility. And as long as volatility maintains above that 200-day moving average, it looks like there's going to be more selling pressure and the risk is going to remain to the downside. So for Friday, the Bubba Show, everybody have a great weekend. Remember, if you want to hear me on radio, libertyexpressradio.com. Have a great day, everybody.